Well, welcome back to Finance Uncut. On today's episode, CBDC warning, and can gold and silver be banned? So late last week, the Australian government, the Australian Treasurer, Josh Frydenberg, came out, whole heap of fanfare, and said, we are embracing crypto and digital tokens, and everyone, all the people in the decentralized crypto token world, so the Bitcoiners, Ethereums, you name it, they all got excited and thought this is fantastic. But they didn't actually read what the real agenda is here. And here, Josh Frydenberg, talking about how Australia is going to be leading the digital economy. And Gideon Rosner from the IPA, I have a lot of respect for Gideon, but he's one of these Bitcoiners who are just championing this, and this is fantastic. And I just had this to say to him. So I said to Gideon, this is clearly about implementing a CBDC, don't you? I, for the life of me, don't understand why so many DeFi crypto enthusiasts. I love DeFi. I'm a Austrian economist. I love Friedrich Hayek's decentralize of currencies. Absolutely love that. Are excited about this government announcement. This is exactly what the Marxist central planners are wanting. And how do I know that this is all about a central bank digital currency? Well, that's because the Reserve Bank of Australia and their industry partners have just completed a wholesale CBDC research project on the exact same day that the Australian government have come out with this announcement. And in fact, if you even read what the Treasurer had to say, and we'll just touch on that. So the Reserve Bank and Treasury are considering a feasibility of considering the feasibility of a central bank digital currency under reforms aimed at establishing a regulated onshore cryptocurrency industry and driving competition across the buy now, pay later and digital wallet payment systems. That's right. They're wanting a CBDC, and they are the competition. They're going to drive competition. They're going to drive the decentralized ones out of business. The Morrison government will land on its financial system reforms within 12 months, implementing new protections for consumers. That's right, because we can't have decentralized, unregulated cryptos or currencies out there. A key element of the government's reform package will focus on the merits of a retail central bank digital currency. There you go. Following similar considerations by regional partners including Singapore and Malaysia. The CBDC would offer a type of digital currency issued by a central bank and linked to sovereign currency, allowing for conversion between different forms of money. A retail CBDC would provide a digital version of cash that was universally accessible. With the RBA and central banks across the globe actively investigating technologies to support CBDCs, a senior government source said the proposal was akin to an RBA-backed Bitcoin or cryptocurrency. This is not supporting Bitcoin and all the decentralized private cryptos out there. This is all about sucking people in to the central bank digital currency. And what is a central bank digital currency? Why do I think it's so bad? Well, let's cut to a clip and find out.
How have the central bankers, this is my last slide because my 12 minutes is just up, have reacted to the truth coming out? They admit that they've been telling porkies, and now they propose to increase their power. So central bankers belatedly admit, oh, now that you've mentioned it, yes, banks create the money supply. So let's abolish that now. And also, by the way, let's abolish cash. So what should we do? Well, introduce digital cybercurrency that central banks issue and control, and thereby gain total control over all economic transactions, decisions, and the whole lot you've just heard from the CEO of the GDI. So the greatest concentration of central banking power in history is really the bid they're aiming at. That's the central bank's goal. And, of course, digital accounts of dissenters and regime critics could be switched off. It'd be very difficult to even purchase necessities. So this is an Orwellian dystopia of total control, the end of any freedoms. That's really what central banks are aiming at. Several central banks have, like the Bank of England, already prepared their microchip implant, RFID chip, to be implanted under your skin. And why is the sudden discussion about universal basic income from all the grassroots and inverted commas movements and billionaires? Oh, universal basic income is the bribe for you to accept the microchip. The overarching trend of the 20th century is concentration of power in the hands of the few. That's what we have to keep in mind. We have to work against this. We don't want to have these unaccountable central planners making decisions. We need decentralization, and the solution therefore is to maintain public money in the hands of local community banks, decentralize decision-making, give local people the power in the form of local public banks and local not-for-profit community banks. As I walked in, I was delighted to see that the Gottlieb Duttweiler Institute is also about Genossenschaft and cooperatives, and of course, the majority of banks in Germany are cooperative banks.
The government plan for the digital dollar revealed. And is the digital dollar just the next step in the agenda to take us straight to communism? I'm going to explain this to you in 3 simple, fast steps. Step number 1, it all starts with the Banking for All Act. So the crucial takeaways for step number 1 is that we realize if we all have an account with the Fed, they will know every transaction. There will be no privacy whatsoever with banking. They will basically have your bank statements. And if that sounds very Orwellian, very 1984, trust me, you don't know the half of it. Wait till we get to step number 3. Step number 3, the dystopian endgame agenda. Does it take us straight to communism? I'll let you be the judge. So what we've learned in step number 1 and 2 is they know every single transaction if we all have accounts with the Fed. That is a huge amount of data. Also, they have control over M2 money supply velocity, therefore the rate of inflation. Let's take this to its logical conclusion, or what could happen as a result. There's one thing that's safe to say. The politicians and the global elite want more centralized power. And the number one thing they could do to have that centralized power would be to create a central bank that was the only bank. That's it. So what would happen if they take rates negative? They reduce the amount of bank reserves like we talked about in step 1 and 2. This eliminates the retail banking system. With negative interest rates, they can't make money with their old business model of borrowing short and lending long, pocketing the spread. And if you decrease the amount of bank reserves they have access to, you again limit the lending. And if you limit the lending and you make lending completely unprofitable, the banks all go bust. Now you may be saying to yourself, well, George, what about the investment banks? What about the Goldman Sachs, the JP Morgans? They're making all-time high profits right now, even during the cerveza sickness, while the retail banks are tanking because they're going down with the real economy. But let's think this through. The Fed has contributed to this boom and bust cycle we now have in asset prices through lowering interest rates. They haven't gone negative yet, but they very well could. This, along with QE infinity, has created an environment where the investment bankers, the insiders, the financial insiders, are getting rich. This goes back to my video on the Cantillon effect, by the way. But we know it creates this big boom, and right now we're in the everything bubble. And all of the financial insiders just lever up. They create all of these derivatives, the quadrillions in derivatives, because they know if it comes crashing down, it doesn't matter because the Fed or the government will bail them out. So there's limitless upside and absolutely no downside whatsoever. But what if the Fed comes in or the government and decides, hey, We want to not only be the central bank, we want to be the only bank. The retail banks have already gone under, but what happens if we go through the bust part of the boom-bust cycle and all these investment banks go to the Fed and say, hey, we need our bailout. We need our bailout. We're systemically important. We're too big to fail. And the Fed basically gives them the finger. They say, sorry, guys, this time we're letting you go out of business. All of a sudden, we'd have no retail banks, no investment banks. We would only have a central bank. So who would be in charge of lending? Well, it's perfectly convenient because now we all have accounts with the Fed. Every single person and every single business. But let's remember that the Fed doesn't worry about a profit and loss. They have an infinite balance sheet because they simply print the bank reserves out of nowhere. So who cares if they don't get paid back on a loan they create? It doesn't matter. So the next time the average Joe goes to buy a house, the Fed, because they don't care about profit and loss, they don't have to look at a credit score. They don't have to look at anything that would tell them the ability of the borrower to actually pay them back. They could start looking at things such as a social score. So let's say the average Joe has a reasonable credit score, actually very good at 700, but their social score, because they haven't worn a mask lately, goes all the way down to 500. So the central planners that are all about social justice, they look at average Joe's credit score and say, okay, that's okay, but they look at his social score and say, no way, we're not giving you that loan. So Joe doesn't get his house. He was a bad person. He didn't obey the rules, therefore he doesn't deserve the loan. And you know as well as I do, all of these global elites want to move away from free market capitalism. They want to move away from the emphasis being on economic growth and prosperity, the creation of goods and services, and they want to take that spotlight and put the priority instead on social justice. And it's not me just saying it. To show you exactly what I'm talking about, let's go to the World Economic Forum's own website and everyone's favorite global elitist, Klaus Schwab. This headline pretty much says it all. We must move on from neoliberalism in the post-COVID era. And if you haven't watched any of my videos on this, the World Economic Forum sees the pandemic as an opportunity to create what they call a great reset of the entire global economy. So the next question becomes, what is neoliberalism? Well, for that, let's go right to Investopedia.
Neoliberalism is a little-used term to describe an economy where the government has few, if any, controls on economic factors. This concept comes from ideas first introduced by Adam Smith in his classic 1776 book entitled An Inquiry into the Nature and Causes of the Wealth of Nations, as well as laissez-faire economics. These economic policies are similar to those proposed by political groups referred to as libertarians. Neoliberalism advocates propose 1. The reduction or elimination of most business regulation. 2. The government should be required to balance its budget. 3. Taxes should be low and simple to calculate over a very broad base of taxpayers.
So neoliberalism is exactly what we need to continue to grow the economy and get out of this recession/depression that we're in. We don't need less neoliberalism. We need more neoliberalism. But let's go back to this social agenda that the global elite have. Further down the article, Klaus himself references one of my favorites, Milton Friedman. He says the Nobel laureate economist Milton Friedman believed the business of business is business. Of course, that makes a lot of sense. He didn't consider that a publicly traded company might be not just a commercial entity, but also a social organism. And you can see what's happening here is they don't like neoliberalism because neoliberalism gives the individual priority. They're the ones that determine how goods and services are distributed throughout the economy. It's a bottoms-up approach where Klaus and his cronies and the global elites, they all want a top-down approach. They want to make all the decisions. They want to determine what we should do with our lives. They want to determine what is right and wrong. They think that we are too stupid to make those decisions on our own. Therefore, we need to move away from this bottoms-up approach that gives the power to the individual and move more and more towards a centrally planned economy. In other words, communism.
Well, there you go, folks. Who would want a central bank digital currency? Only these crazy central planners, that's all. You know, this is going to give them so much power. We're going to lose, you know, whatever freedoms we've got left, all right? They're going to be able to see all of our purchases. They're going to be able to control, you know, basically buying and selling using this technology. You know, if we're not a good citizen, you know, what's coming next? A social credit score? So if we don't behave, you know, they can just switch us off. You know, they can create huge amounts of inflation using this because they can just create new currency or new tokens, new coins, send it directly to your wallet, and then, you know, you've got a time period that you've got to spend that, or it disappears. Or, you know, it might be linked to your CO2 purchases, you know, because now they can measure that, you know, based on your purchase. You buy some meat, oh, you've gone over your CO2 limits, so no more meat for you for the next year. This is crazy, crazy stuff, and, you know, I'm not a conspiracist. So what am I doing? What do I recommend? Well, I don't recommend anything, but what am I doing? I'm buying gold and silver, the physical gold and silver coins, because we're not trying to create our own Atlas Shrugged, but we're being pushed out by a lot of these rules that are happening right now. And we are creating our own little communities. And at the moment, you know, we'll see where that goes. But frankly, I want to own some physical gold and silver coins. They may need to be used in the future the way things are going. So I've certainly got a lot of that. I've got it both stored here in Australia in 2 different areas, plus internationally I've got some stored, and I've got some nearby. I'm also speculating in the gold and silver miners and explorers, as you know, and both the energy sector, the traditional energy sector, because, you know, people think we do away with that. Well, yeah, let's wait and see what happens there. And obviously the whole electrification, I'm heavily invested in that as well. I see that as a no-brainer. So, you know, but the question is, gold. You know, if we own gold, if we own silver, won't it be confiscated? Well, let's just cut to a clip, and then we'll come back and I'll share my opinion. But let's just cut to a clip with Luke Groman, who actually gives a really solid answer about this.
Okay, KW, a common argument against owning gold is that in the exact time you want it most, when the Fed revalues it, the government will deem it illegal to own right before they do the revaluation, make you sell it to them, i.e. 1933. What are your thoughts on this potential scenario repeating? In my opinion, that's unlikely. So for example, in 33 and in 1914, when gold was seized in the US and around the world, it was money. It's private property now. If nations can seize gold, they can seize your house, and quite honestly, they could seize your 401k and your retirement assets, where, you know, maybe there's $500 or $800 billion of private gold in the U.S., but there's 30 trillion in private retirement assets. It could be taken with a few keystrokes, in theory. So I don't think it's very likely that gold could get seized. Now, with that said, I think if they were going to do a revaluation, here too, because it's not money, they actually want, I would think the governments would actually want you to hold the gold because basically you're going to turn around and hand them gold for cash. You're going to take that cash and those depreciated dollars and buy real assets, reinvest in the economy. That's actually the whole point, is you're basically, the revaluation of gold is to recollateralize the balance sheets of central banks, write down debt. If you seize the gold or you take the gold off people before then, you sort of defeat the whole purpose, in my view.
So yeah, I agree with what Luke's saying. Now, a couple of other people I've heard have said that, well, look, if gold or silver or just gold is revalued and in the same sense that Luke talks about, then what will happen is they'll just add a capital gains tax to people. So if we buy gold for $2,000 and it goes to $20,000, then there'll be a capital gains tax for us to pay. And well, that option will be much better than not owning gold at all. I don't see the confiscation being done again. And you need to remember back, as Luke says, it was money back in 1933. It was money. Now it's an asset. Back then also, because it was money, the majority of the people owned the majority of gold. In fact, in 1932, it's estimated that Americans owned $1.4 billion worth of gold at the gold price back then, and that was double the reserves of the Bank of England. And even when that confiscation was brought in, 20% of the gold outstanding out there in the public was never handed in. And those families of those people who never handed in probably thanked their grandparents for not doing so later on. Where now, I believe the numbers are about 10.8% of the population own gold. I think it's 11.6% own silver. So, the majority of the public don't own gold and silver. And, you look at the mining space, they own next to nothing. It's about a third of its actual mean, the amount of people that are invested in the miners. So I just don't see it. I just don't see it. I mean, yeah. But anyway, that's my opinion. What do you guys think? I look, the other thing I'm doing is obviously, buying the gold, silver. I am moving out of the city, moving on to some farmland. Things are really happening. But anyway, love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Take care, guys, and I'll see you all again on another episode of Finance Uncut.